Today we're covering the top myths and truths when it comes to real estate investing for beginners. After helping thousands of people to get into real estate investing successfully, it's become very apparent that a lot of people never get started because they get confused by these myths that I'm about to cover. And be sure to stay to the end, because just remembering one of these myths and truths can be the difference between never getting started and building a multi-million-dollar portfolio. Now let's get into it. Myth number 1, real estate investing is complicated. Now here's the truth. Anything taken as a whole can appear more complicated than it actually really is. Take your car, for example. You don't have to be an engineer or a mechanic to drive it, right? Of course not. You just have to know the basic rules of the road and how to drive. Now real estate investing, it's no different. So the trick is to take a step back and identify the aspects that actually matter the most. And then in the end, you'll come to understand that the fundamental things you need to know and do to be successful are simpler than you might have even imagined. And as Warren Buffett says, you don't need to be a rocket scientist. Investing is not a game where the guy with the 160 IQ beats the guy with the 130 IQ. What I've come to understand about learning is that it builds upon itself step by step, and it's absolutely essential to learn the basics and then build on them over time. Now, the reality is that you will never ever know 100% of exactly what you need to do, nor that you need to know. You just need to know the right thing to do at the right time. And over time, from being in the game, from analyzing investments, from making offers, you'll begin to see the simplicity in real estate investing come forward. But like anything, it will progressively come and stack step by step until you become the expert that you want to be. Now, one of our core goals at our company, Real Estate Skills, is to provide the teaching you need to be successful in real estate investing and to help you on the path to financial wealth. So the bottom line, real estate investing is only as complicated as you make it. And I encourage you to check out the rest of the videos on our YouTube channel, because we pride ourselves on making real estate investing simpler than a lot of other people out there. Now, myth number 2 of real estate investing for beginners is that you need to be wealthy to get into real estate. Now, the truth is, you don't need to be wealthy to get into real estate. Now, a lot of the best real estate investors actually started with nothing, and they learned how to make money actively through real estate investing. So what this means is real estate investing doesn't have to require any capital or a ton of capital. Now, can money help your endeavors? Yes, absolutely, if you know what to do with it, but it's not necessarily needed. For example, you can get started in real estate without any capital by learning how to wholesale real estate. Now, on our YouTube channel, we have a lot of the top videos on wholesaling, and I recommend checking those out. What wholesaling is when you put a property under contract to buy, and then you sell the rights of that contract to a fix and flipper for, let's say, $10,000. And now it doesn't cost any money to put a property under contract. And so this is a great way to get started in real estate. Now, if you wanted to outright buy a piece of real estate yourself, then there are actually options out there that you can leverage where you only have to put 3.5% down. And in some cases, if you're a veteran, you can actually put 0% down. So for example, let's say you want to buy a house that's worth $200,000. Well, with a 3.5% FHA loan, you only have to put $7,000 down in order to purchase the property. Now, understanding this concept of leverage is important because some people think that you need to come up with the full $200,000 price in order to buy the property, when in reality, you only have to come up with $7,000 when using this type of leverage. And that's a huge difference in the amount of capital needed just because you have a little more knowledge now. So if you want to get started in real estate investing, but you're not wealthy, then there are ways to start building wealth actively, like wholesaling. And then if you want to buy a home or rental properties, then I absolutely recommend using leverage, where you only have to put a small down payment down compared to purchasing the property outright with cash. And so no, you don't need to be wealthy to start investing into real estate. And this is exactly how you can get started if you have little to no cash on hand. Now, myth number 3 of real estate investing for beginners is that successful investors are smarter than me, and real estate investing requires knowledge that most people don't have. Well, here's the truth. The best investments will be in areas that you can understand or that you already understand. And so one of the most important concepts that you need to start learning, and that successful real estate investors know, is compound interest. And compound interest works in 2 ways. 1 with money, and 2 with knowledge. The best investors, they're no smarter than you. The reality is they just worked at something a bit longer than you, and they never stopped learning. Additionally, we have to understand that successful real estate investing is not investing in what you don't know or what you don't understand. This would be like trying to throw a dart at a dartboard with a blindfold on. You'll be lucky to get anywhere close to your target if you do that. So to me, successful real estate investing is investing into what you know and what you understand. So you'll want to choose an area that you're already familiar with, or one that interests you and you have some sort of affinity to, and commit to becoming an expert in that area. For example, when I started out in real estate, I was pretty overwhelmed by all the different types. So there's apartments, industrial, office buildings, land, mobile home parks. It goes on and on. But what I decided to do was commit. Commit to becoming an expert first at one type of real estate, single family houses, and to commit to making an active income through wholesaling and flipping houses. Now this focus gave me the confidence and drive, and now I wasn't distracted by trying to learn 10 different types of real estate and 10 different types of strategies. Because the trap I would fall into is what so many people fall into, is that you get lost, you never get started, and there's too much to learn. And then one week they're trying to invest in the land. The next week they're trying to buy a mobile home park. The next week they're trying to flip an apartment building. And the issue is that they lack focus in one area of real estate and they're never able to truly grow. So successful investors, they aren't smarter than you. They've just intentionally focused on one type of real estate and one strategy in order to start making progress and to start getting results. Now, myth number 4 of real estate investing for beginners is that real estate investing is risky. Here's the truth. As investors, it's actually our goal to lower risk as much as possible. And the reality is everything can be risky, especially when you have no idea what you're doing. Now, according to the Merriam-Webster dictionary, it says that investing is to commit money in order to earn a financial return. Now, nowhere in the definition is the word risk. And this is because where the risk comes in is when you're actually uneducated in the field. So investing by itself doesn't have risk in it. And for the best investors, they don't think about investing as risk. The mentality is actually all about de-risking a project or investment as much as possible. And it's about understanding your numbers to a T and so well that there's actually a higher probability of success than failure. And so how do we do this? Well, we do this through using tools like our real estate investing calculator that we use to analyze rental properties to ensure that they're a good investment, that they cash flow, that they appreciate. That's exactly what we do. And if you want to try out our deal analysis calculator that we use to buy rental properties to make sure they cash flow, that they appreciate, that they're going to be profitable, then you can get that from the description down below. So for the best investors, it's about following sound real estate investing principles. By doing this, we take out that risk as much as possible. Now, one of my favorite real estate quotes is that you make your money when you buy. What this means is that the moment you buy a piece of real estate or even put it under contract, there is profit to be made immediately from the deal. And so how we do this is by structuring the terms of our deals with the correct pricing and with the correct back out clauses. Now, when we do this the right way, we are not then relying on speculation to win. And we know at the end of the day, if the deal doesn't work out, then we can back out of it due to our contingencies in the contract. Furthermore, it's always our goal to get properties under contract at a great price that we know is going to make money for us all day, one way or another. I'll give you a quick example. One time I was on a phone call with a real estate agent and they were telling me that I could get a property under contract to buy if I offered at $170,000. But time was of the essence and I didn't have time to get out to the property and actually physically see it. And so right then and there, I had to agree to $170,000 on the phone call or I would lose out on the deal. So guess what? I agreed and had a contract submitted immediately with the price of $170,000 without ever going to the property and without even seeing it. Now, the reasons why I was comfortable with this move were number 1, I understood the type of real estate I was buying, single family houses. This wasn't some crazy piece of real estate that I didn't know or understand. And 2, due to the contract I used, I was confident that I could still back out of the deal after getting it under contract if I couldn't make a profit on it. So what happened was I quickly resold the house for $182,000 and was able to get $12,000 from it within a couple weeks without doing any work whatsoever. So if I hadn't made that offer right then and there on that call, if I hadn't made that decision, then someone else would have profited on that deal. So as you can see, part of successful real estate investing is having the right knowledge, awareness, and willingness to take the right action quickly. When you know that the worst thing that can happen is that you just back out of a contract because you protected yourself with back out clauses. And what I'll do for you is I'll actually put our contracts that we use to wholesale, flip, and invest in real estate in the description down below. If you want to grab them, just check it out. So here's the bottom line. Real estate is as risky as you make it. The best real estate investors remove as much risk as possible from each deal and always focus on maximizing their returns. Now, myth number 5 of real estate investing for beginners, all the good deals are taken. Now, the truth is every market has its fair share of good deals. Now, here's what we know about the world and how it actually creates opportunities for us real estate investors. There are basic economic forces like population shifts and migration. There's job growth and declines, interest rates, and the redevelopment of certain areas. Now, all of these things play a part in creating real estate investment opportunities, and they're going on all of the time. Additionally, what's going on all the time that's also creating opportunities is that we're all human. Let me tell you what I mean. What I mean is that opportunities arise both positively and negatively from being a human. So for example, there may be someone in debt who needs to sell their house quickly. Well, they might need to sell their house at a discount. There may be someone's family member that passed away and they need to sell their house quickly. Well, they may be able to sell that house at a discount and you can cash flow that property or have it appreciate. Or there may be a divorce and they need to sell their house quickly. Or there may be a new job needing to be taken in a state or two over and they need to sell their house quickly. So I think you're starting to get my point here. The point is these tendencies of being human create opportunities in real estate investing all the time. And these exact scenarios I'm covering are going on every single day across the United States. So to say that there are no good deals in the market or my market would mean you're not aware of the unique opportunities that are happening every single day and that you're actually overlooking deals that are right underneath your nose and in your own backyard. Now, in some markets, there might be more than others, but there are always good deals to be had. And it was Confucius who said, "He who says he can and he who says he can't are both usually right." And so the reality is the good deals are actually only gone if you believe they're not there and you're saying they're not there. Confucius. Now, myth number 6 of real estate investing for beginners is that successful investors time the market waiting for the perfect opportunity on the sidelines. Now, the truth is the best real estate investors are actually in the game creating their own timing. So most people think timing the market is sitting on the sidelines until the perfect moment comes to jump in and finally take some action. But I got news for you. There will never be a perfect moment, and the fastest way to go nowhere fast is to try and time the market. The reality is timing is about being in the game the entire time. And I always like to say that good deals go quick because that's what I've seen in my experience from doing this for the last 12 years. You have to be in the game. You must be able to recognize a good deal when you see one. And you have to be able to seize that opportunity or else you're going to be beat out by the competition every single time. So there is no perfect time, and successful investors actually create their perfect time. And this is just how the real estate game is played successfully. Now, what this means is that you're constantly finding deals that fit your criteria. You're constantly reaching out to agents and sellers, and you're constantly ready to submit offers and actually submitting offers to wholesale, fix and flip, and buy rental properties when these opportunities arise. By having sound principles and being a smart real estate investor, you don't care about timing the market now. You care about investing into deals that fit your criteria and will provide you a great return. That's what it's all about. And the ones who are in the game are the ones who actually win. So those are the top myths and truths when it comes to real estate investing for beginners. Now, if you like this video and you want to actually start sharpening your skills so you can start getting real estate deals that can make you an active and passive income, then I want to invite you to my free weekly webinar where I'll show you how we find, evaluate, and profit from real estate deals in a multitude of ways. Now, I don't want you to worry. I made this workshop to be packed with value, so whether you're a beginner or seasoned investor, you're going to get a ton out of it. And the best part is I'll cover strategies you probably never ever heard before, and you'll be able to leave the webinar ready to start implementing and put what you learned into action. So whether you're looking to wholesale more houses, do that first fix and flip, or invest into rental properties across the USA, I made this training for you. And you can actually grab a spot for free at realestateskills.com/webinar, and then I'll put that link in the description down below. This is Alex Martinez, CEO of realestateskills.com. Happy real estate investing. I'll see you in the next one.